The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Thank God it's Friday. It's Friday night here in Asia. Friday morning in the States, and not a lot of news out there as far as I can see. And I can see my pictures kind of blurry coming through the TFNN network. We might want to reconnect at the first break. Bear with me a little bit here. Let me turn off my camera. Is that okay? Let's try to do this without the camera right now. Is that cool? Okay. We're going to turn off the camera, and that's probably not a bad thing to people watching this show. So here we go. Got the scanner up. We've kind of launched this on the TFNN network, and real happy with the way things are going with this. And I love the information inside personally, and I hope you guys can really get some benefit out of it. It's a great deal. We charge a lot of money to institutional traders for relatively the same information, and I've got my personal admin terminal up. We're going to talk a little bit about some numbers here. You guys are seeing some speed dials on your version. I want to kind of go over some breadth charts that really, looking historically, it's nice to kind of visually see those. But I think kind of what we wanted people to see and feel was, what's in the now. So we created these speedometers that we talked religiously about yesterday for about 2 hours, Tom and I. And I personally like those a lot. So that's kind of what I normally look at, but I'll just kind of go over some details of the numbers before we show those dials again. But did the free video on the TFNN site today on the British pound. It's a pretty, much, like easy as falling off the log type situation. I've got it highlighted here on the scanner. And the cool thing is I know these inflection points ahead of time. You know them too if you got this scanner. And the bottom of our profile, fair auction, if you will, before that kind of gets into an imbalanced situation on a long-term price action, that is 159.52 rounded off on the British pound. We broke below, closed below, went back and retested. And if you hear some noises in the background here, there's some festive activities here in the Philippines tonight on the street. So we got that going for us. Here's the 159.52 unfair lows on the weekly, and we closed below and went back and retested that this week. All right, and when we got back up into that area, then you kind of got to lick your lips. And I'm just going to pull up our multi-time frame kind of level situation here. Here was that 159.52 rounded off area right here. The level of the market was up here. And I'm going to show the charts here. All right, so this is our weekly. So when we closed below last week, and then we went back and kind of retested former support, now resistance, a little bit of an education here today. Those are the types of moves that, you as a trader, and you're looking at our information and you somewhat submit to this information in general, you can't really ask for anything better than that. I've got a pretty fundamental biased opinion on the British pound, the euro, and the, pretty much everything except the dollar right now. And until that's broken technically for me to feel a little differently, I'm going to keep pressing the gas pedal in that direction. And what does that mean? That means that when we get a close below profiles, come back and retest, then I'm relatively happy that I allowed the market to come back to me into a high probability area to lay the wood to this thing again on the short side. All right. Since that happened, we are 300 pips farther south this week. Okay. That doesn't always happen that way. Sometimes you get a little noisy situation that irritates the crap out of you. But in this instance, and again, that's trading, and you got to take some small losses, hopefully, with your risk reward scenarios in place. But again, you got to let some of these things breathe. And when you're right, you want things to develop. And there was that kind of weekly situation up in there. That, remember, if you're looking at our information, you always kind of want to remember that the larger term time frame inflection points have more bearing as you scale down. So weekly takes precedence over daily, over 240, over 60 on down the line. Now, Tom yesterday was kind of getting a little, rightfully so, getting a little, head start, if you will, possibly by our 60-minute breadth changing to negative just slightly negative. I'm not talking about hey, the Katie bar of the door would get negative. As the S&Ps were turning, that breadth was turning a little bit south and negative on our 60 minutes on the S&P futures breadth indicator, which I'll show you in a second. But again, that doesn't determine the long-term trend change via the daily or the weekly breadth changing. That just means that we might have a possible trading opportunity against the long-term trend. At that stage, basically, that's kind of what that means. So getting a little bit off what we're talking about with the pound here, but right now the pound, considering that as I looked at this on our scanner, and here's the British pound USD, you've got zero reasons at this stage to try to pick a bottom yet, if you're considering even doing something like that. I think you've got a situation where you need to just sit tight. Let's get some confirmations if you're going to try to catch a sword down here. And anything can happen. This thing could rally 300 pips back really quick. I'm a big fan of anything can happen at this point in my life as far as trading goes. But you've got some fundamental things on your side. Now you've got some technical things on your side, and I don't see, based on our looks, that there's any confirmations to even try to start thinking that this thing could turn around at this stage. We are red across every time frame, and we're giving you the inflection point areas. Not that you even need charts anymore for this, to really understand where this thing is relative to being imbalanced on the downside. Okay? I feel like I'm talking with some conviction this morning about this, because this is something we've kind of tried to hang our hat on. And if you guys have been participating in this trade all the way down, we really picked a super cool battle up there at 165 for you. I want you guys to make points with what we're talking about. And, trend's been down. You've been given areas to pick new areas to pick battles. That weekly kind of retest up there was the latest. And 300 pips is no small amount when it comes to trading currencies. And if you can, the mark of a really good trader, when, we had some pretty hefty prop groups up in Chicago when I was there, you can play the dollar cost averaging game. I hate it when they start talking about that on TV, because it's just it's a doubling down technique for long players, and obviously there's a long bias slant towards all the stock markets of the world, except in 2008, of course. And generally that can work out, but the mark of a good trader, the way we saw it, was a guy who was going to add to a winning position when he was right and step on the gas pedal and tighten up the stops on those extra positions that he was adding. And this is a situation, if you want to get into hardcore managing a bet, if you will, this is one of those situations, all right? So things on their lows go lower, things on their highs go higher. This is one of those things, and I'm just speaking from experience with that. As we want to stay on currencies here in the first segment, we want to take a look at the euro. Does that look familiar? I think it does. All right. So again, the thing with the euro, though, we do have some magenta bars appearing on the long term on our navigator. Here's our daily situation. The only thing that bothers me about the euro relative to the pound is we do have a little bit of a divergent situation here. So I'm probably not as bearish. Why did I say probably? I'm not as bearish on the euro as I am the British pound right now. But here's the 240 situation on the euro. You got some targets down south here, 124.03, and that's kind of where I'm probably going to call it quits on the euro for a while, because we've got a little bit of an indication that this thing may be taking a rest at some point. The yen, what can I say here? It's been the best trade since 101.33. Why? There's 101.33. We've talked a little bit about this. I'm just going to reiterate here since we're on currencies this morning in the first segment. 101.33, this thing stayed in force forever. This profile, if you will, is like a dream come true, really, when it comes to trading. You had a massive fence to lean on down here. Boom, had some targets, some retests of those targets, as you can see there, remembering that it's like an exponential moving average. These most recent profiles, especially ones that have stayed in force forever, have a serious bearing on what's going on in the current landscape. Traders don't forget that too easily. And then, boom, off to the races. You have that fundamental showing your hand type thing from the Japanese central government, or what do they call it, the BOJ? Is it BOJ? I can't. It's a little confused today. But here's the situation on the dailies with the yen, 115.58. I was actually thinking that this action right here was kind of a little maybe toppish, but as we kind of crowded back up here and didn't want to get away from it, and then closed above this inflection point yesterday, these are continuation patterns now, and I thought 115 might be somewhat of a target for this for a while, but I've been proven wrong that, and we've never talked about shorting this. We've only talked about buying support. I thought we had a chance to possibly buy this even lower, maybe 114.45, not even get near there. So here is what's happened, 115.28 rounded off. As we kind of looked at that and closing above the daily, we came back and retested, and boom. So what do you do now? You don't short this. That's what you do now. You do not short the yen. There is zero reasons and indications. And I'm going to go to our scanner really quick here. And I'm going to look at the yen. It's just like we looked at the pound, red across the board, yen, green across the board. And this will keep you out of trouble, hopefully. When these types of things happen, you got to ask yourself, and I hate to be so brutal when I say this, but you got to ask yourself, do I really want to think otherwise right now? Do I think that this thing is a shorting candidate? I don't think so. And, I don't know how to kind of make that any more clearer than for you to just look at this one situation here and one situation here by, is it time to go long? No. Is it time to go short? No. Let somebody else pick those battles. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. If you haven't traded currencies before, might want to start thinking about it. I think these things are going to still be in play for a while. We've had some great moves lately, and you can't ask for anything better than this as a trader. Here's the Aussie. We've been talking about, leaning on the short side on the Aussie. You've got a little bit of a, government help, if you will, on the Aussie here too. This is, it's all ultimately inflationary in my opinion, but I can't remember when you've had things like this in your favor. I mean, years ago, you never had these types of things you could lean on where, you had Big Brother, if you will, telling you that, hey, we're going to do this. It's going to happen. All right. You got the Japanese government, if you will, telling you that. You've got the U.S. government on the Treasury situation telling you that, which also affects the stock market. And the Aussie dollar, we talked about leaning on this, trying to trade these inflection points down. Had a little bit of a disturbance right there. The Aussie dollar hasn't moved like this in a long time. And we always talk about waiting for the retracement. Possibly, if it never happens, them's the breaks. But this 87.26 on the daily. A little bit of noise up above there. combined with 87.19, that's a very close neighborhood that those two inflection points are at. And, we did eclipse some recent lows here, which, kind of from a trading standpoint, that's just kind of getting people out of the market from a stoppage out situation. But when you got those inflection points lining up, you got to pay attention to them because those are great leverage areas. So that DMZ between 19 and 26, so to speak, that general area, we've come back into it. I'm going to pull up our daily here, and we've been able to kind of, with a little bit of noise there and getting stopped out of things is not a bad thing. You kind of had the market come back to you, and now we're possibly in a situation where we could trail down. Doesn't have to. Got a situation where we've got a divergence situation on Navigator versus this lower lows and higher lows here, if you can see that. But, again, I'm going to play this game until technically I'm broken, basically. So, again, this is another high probability setup. You got the Australian government kind of in the background hoping that this goes down, and if it doesn't, they might come in and use the unconventional measure speech, as so many other places have done recently. The ruble. I still don't see an end in sight in this. I think 50 is, we got close to 50 the other day. What did we reach? 48.50. I still think 50 is going to be the target on this. So if you're trading the ruble and you've got, again, another kind of bullish situation that's come about, when you've got price action well above a profile that comes out, that is extremely bullish in nature. And, take that for what it's worth. The ruble, just staying on currencies here in the first part of the show today. I don't, put your stops in. Here's the short term on the ruble if you're trading this. Unfair highs on the most recent short term box, 46.40. That's kind of where you can use that as a barometer a little bit. The dollar, before we go to break, just to kind of give some points here. Ukraine is not weak. Let's see. The dollar, again, we're kind of off to the races here above the most recent inflection point. This crowding here, didn't want to kind of use this as a cap or resistance level, 88.15 right now. This is our daily on the dollar, and stops can be oriented below there. We talked about this possibly even going higher now. It'd be nice to have a decent pullback to really good support on the dollar around 80, 87 general area, but not letting people kind of relax a little bit on that right now. So before we go to this break, just want to briefly glance at gold here. Get our data to come up. Looks like 1140 might be retested again. I think we've been as low today already as 1147. We're going to go to break here. We're going to come back. We're going to use the scanner to talk about a couple things, and we'll be right back, folks.
Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hey guys, just looking at our scanner here, looking at the breadth. I was just doing a little checking for some folks that were calling in our desk here. This is, still positive on our short-term 60 and 240s, and the market coming close to opening. We'll get a little bit more, stocks will be opening, some more prices will be coming in a little bit more valid, but the long-term breadth is still, in my opinion, pretty positive. Daily and weekly, this is just a kind of a personal math calculation to that hopefully will make this pretty easy to just in a quick glance look at. On the other hand, looking at our Eurostoxx 50 out of Europe, long-term breadth's starting to kind of mitigate here. So I want to kind of look at the DAX and look at the FTSE a little bit in a second based on that, see how kind of we're acting and where we're at. But the S&Ps, this is the situation at hand. Had a little bit of a report come out, not a big impact. 2036 on the S&Ps. This is our 240 view. Inflection points 2038 and 2030 down below on the S&Ps. The big numbers, though, in my book, are 2014, 15 to 2019. That DMZ, if you will, is don't know if you guys can hear the noise in the background. That DMZ, if you will, is going to be kind of a big deal here. But on the daily, we do have a new box that has appeared we got a forewarning of that with an orange bar yesterday. So new inflection points on the daily now as we're coming into, what time is it? 8:35 Eastern. So now the inflection points to be aware of on the daily, 238, let's just call it 239, round it off. And down below, we've got 214 and 219. Current unfair lows, which is our weekly unfair highs, and 219 are former daily unfair highs. So that DMZ is becoming more and more stronger as more inflection points line up down there. So that's going to be decent support as long as our breadth stays positive. Okay? I am getting ready to laugh. This noise is so loud outside. Or cry. So 239 unfair highs on the S&Ps. That's something to pay attention to for today. All right. Let's see here. Check something really quick. Okay. All righty. Let's look at the NASDAQ really quick, just to kind of circle back with some of these things that people are trading. 4176 is going to kind of be the uncle point below there for me on the long side for the NASDAQ right now. Here's the short-term lids, if you will, 42.1840. We hit that as of the last 4 hours. 42.18 we hit, rounded off. That was the unfair highs that we had predetermined on this short term, and 41.88 below. So let's just take a look at that. 41.88 and 41.76. That's kind of a DMZ down below for support, and the breadth on the NASDAQ is, and I'll show you this. Let's just pull up the NASDAQ here. The profile breadth, starting to turn a little negative here, but I'd really see the market open up to kind of really get an idea of what's going on in the short term. Again, Tom pointed out that the S&Ps was 100% correct in saying that. The short term had started to change a little bit. But until the long terms kind of convert, the trend from a breadth standpoint is still to be defined to be north here. So not a lot of change on the long term. All right, let's go into the 10-year and let's look at TLT while we're doing that. The Lehman 20-year. All right. Talked a little bit about this yesterday in the 2-hour segment that we talked. Again, talked about this being maybe a little bit easier of a situation to get involved with than being long or short the S&Ps. Unfair lows 126.03. Bottom of the box on the daily, we're trading 126.05. Getting precariously close to that level. And we're actually below the weekly unfair highs. And there's a DMZ there. It's just going to be kind of a thick area that we're going to call support there. And, the good news is still, if the stock market ever does turn south, and we've had the bonds and the notes pull back a little bit on that retail report, the bonds and notes could hold based on the market coming in. But the S&Ps in general kind of look like they're not affected by much. And if they start making a new high and spiking up, we could have some technical damage happening on the 10-year. But again, I think that's probably the better trade still. Trying to fight through the noise outside, guys. Here's the situation on the DAX. We kind of got to wait and see, in my opinion, on the DAX with that breadth on the Eurostoxx 50 kind of getting a little negative. Not that bullish on this index. 93.06 up top, and down below, let's just call it 9,200. So, this is kind of no man's land to me, above daily unfair highs and below weekly unfair lows. And, I just think you've got to break down below here, close below or close above the weeklies. So closing above 9,300 on the DAX would be, bullish continuation situation. And a close below 90, let's just call it 9,200. You got a 100-point kind of DMZ there. I don't feel really good about taking any stances right now. So a close below 9,200 is going to kind of be the telltale sign for this thing to possibly drift down with a little conviction. Let's look at TLT. There you go. 118.04, the weekly strong number, and 119, let's just call it the daily. So we're kind of still meandering around OTA in that collection area, if you will. But I think all bets got to be off below 118, I guess, at this stage. And it's okay. It's, in my opinion, it's still the easiest trade out there. It may not work out, but it's the most painless and probably least stressful. You know what? I've used that building calls. Let's see here. All right, let's take a look at our FTSE building costs. We're all in on that. Let's see here. I looked at this earlier. I'm not a big fan of going long the FTSE right now or the DAX because of that breadth starting to turn a little bit. We've kind of gone up a pretty good ways here. I mean, the S&Ps have actually, just blitzkrieg compared to this. But just because of that breadth turning somewhat negative on the long term, a hint of it, I'm not that excited, even though we're kind of up here on the FTSE and on the daily, and we're clear above profiles on the weekly. I'd rather see a little bit more bearing and see another profile appear here on the daily on the FTSE, and just kind of stay away from the long side on the DAX and FTSE right now. Again, hopefully the DAX will get below 9,200, and then that may be another shorting opportunity. I don't know if you guys can hear this noise. It is unbelievable. Is my mic picking up any of that? No. Yes, no. A little. Okay. I would assume it is a party outside, but we're near a main street here, and it's okay. Here we go. Let's look at the Nikkei really quick. Again, this is kind of yen oriented, and I'm going to pull up the scanner here. Let's see. Okay. Thanks, Mark. It's interfering with my thought processes, but maybe not my dialogue. Let's take a look at. I'm sorry. All right, so let me clear this out, and let's go back to our futures. Okay. All right, so the cool thing is with this scanner, you can really, we've got over 2,500 instruments baked into this thing, all the usual suspects in the futures and currency world, and just a plethora of international stocks. And as you can see, the Nikkei, you don't have a lot of reasons here to think about this shorting from the short side. This is crazy. I think the Philippines is having another Independence Day. Is that what this is? I don't have any idea right now. The Nikkei 225. The good news is about the scanner, it's just like we talked about the British pound and the. I'm sorry, guys. I can't even think. This is getting so loud. Just like we looked at our currencies, the yen and the pound in opposite directions. The Nikkei is a close follower. The Nikkei is a close follower, obviously, of what the yen is doing, devalue, or because it's priced in yen. We're going to look at this as something that is really telling us, the scanner's telling us that we don't have a lot of reasons to go short this thing right now, and that's the good news when we look across the board on multiple time frames. And I'm going to start drinking in a second. This is getting really crazy. But as we look across the board, when you're looking at instruments to trade and looking at things to kind of pay attention to, you can set the filters to really flag things like that. And what I like to do is build my own custom filters so I can quickly go in, access those filters, which actually goes in and redials in instruments and exchanges that you've actually set the filters to on the custom situations, and allows you to just kind of go in there and pull up instances that you want to see in certain conditions as they match them. So I'm going to select none here as we finish talking about the Nikkei, and I'm going to come in here and I'm going to look at, I'm just going to pull up the S&P 500, and that on this connection takes a little bit of time to load. Keep the comments coming from the den. I love it. As we look at the S&P 500, I like to, personally, if I want to attack something and I want to kind of get maximum leverage, and I'm going to look at this right now, I'm just going to kind of peruse down here. I'm going to see some tops and bottoms lining up on multiple time frames. And it just so happens, I see Agilent Technologies there, and I'm going to go in here and I'm going to say, I was going to finish your sentence, Steve. I like to see multiple time frames lining up with similar inflection points. And just case in point, the top alphabetically highest stock in the S&P 500, Agilent Technologies, 4178 top of the box on the weekly, 4159 top of the box on the daily, and on the 4148. So we've got price action, and the way this works is it gives a 10% range relative to the height of the profile itself. So if you're within a 10% variance of the expansion of the profile itself, it will flag it as top if it's near there, or the bottom if it's near there. So as we look at this, I'm just going to pull Agilent Technologies up. And on my multi-time frame display, you'll see the level of the market. It's very similar to these three inflection points on the top. And what I like to do is then kind of, and what I was going to do is do a filter, but it kind of like proved my theory for me. I was going to do a weekly, a daily. Let's just do weekly, daily. And I want to see what's sitting at the top. Boom. So what that does is it'll conveniently sort these things. And as you can see, Agilent Technologies also shows top on the 240. So I like to see things that are really sitting at these high probability areas that I can hopefully take advantage of. That's just one thing you can do with this. So Agilent Technologies, let's go into our charts and let's just take a look at this. I have to laugh. All right, so again, the markets have risen. We haven't made new highs on Agilent, but we're right there at a weekly inflection point on the weekly. On the daily, a similar situation. New profile appearing today, 41.59, just like the scanner told you. And on the daily, and on the 240, this is the situation. Now, I don't follow this stock. I don't claim to know the fundamentals on it. We're going to come back and take a look at this right after the break. I hear the noise, and you're getting rescued from some of the noise here. So we'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Welcome back to the Noise Factory here. You know, we looked at Agilent Technologies, and we were lining up. We were kind of right above or right into 3 inflection points, lining up on 3 time frames. I usually really like to see those things for trading opportunities, and that is a trading opportunity. But because of the breadth situation on the S&Ps and that being in the S&P 500, I'm not so sure that is a high probability setup for shorting. We could have pullbacks in the S&Ps down to 2014, 2019, and still the breadth stay relatively positive. And does that help Agilent pull off that area? I think without question it probably would, just from a relative strength standpoint. But again, I'm a little hesitant on shorting things that are sitting kind of up in the in that type of area, because when they blow through, if those types of stocks blow through those areas, it's relatively violent, because a lot of people will have to cover. And that's one of the things about market profile in general, getting away from some of the insanity we've been talking about. When we get out of these fair auctions, a lot of folks realize, and it's just a natural, progression of events, that people on the wrong side of the marketplace will have to change their tone, and that means that people will have to start covering. And again, stops are stops in this electronic world. That's very okay, because you're pretty much guaranteed almost a pretty low slippage stop situation these days. But if you're carrying that type of trade overnight, I'm a little hesitant on that. Would be more of an intraday trade for me, just to kind of give you my opinion on it. If you're going to try to lean against those inflection points from the short side, in the market, you do have some help here. You've got a new profile appearing on our daily on the S&Ps, and that may allow this thing to relax back about 20 S&P points, and that may be a good trade. But again, it's got a little hair on it, in my opinion, I think there's other things, other ripe opportunities out there that may be a little more attractive than that. So we got about a minute and a half left here. Briefly looked at gold. I just want to kind of peruse into the silver situation here. This is again, on a relativity type strength trade versus gold right now, and metals in general. This thing's relatively weak. We've come down into the bottom of our box here on our daily again, and I think this is real. Let's see, 1537 right now. Okay, so we've used 240 profiles to kind of regulate this silver trade down. If you can see this, haven't broken above profiles on silver in a long time, and now we're below on 240s again. And this is possibly against the long-term trend, bounce, little kind of short-term contra trade north possibility here, but I'm staying away from this too on silver. I just think that this thing could go lower, especially if the stock market goes higher and new fundamental news keeps coming out, possibly good on the economic side. I just don't see gold and silver hanging in there at all, and I'd rather kind of pass on bounce opportunities here and trying to catch any of these things as they come down. So that's my take on silver. I just wanted to get silver in for the first time in a while. Guys, you've been great today, and thank you so much for bearing with me on some of the things going on in the background here on a Friday night in Asia. So we will pick it back up again Monday. Stay tuned for Steve Rhodes, Trader's Edge. Valuable information that guy gives on a daily basis. Stay tuned and enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.